Hey everyone, welcome back to Lunch at the Market. Holy cow, what a day today has been. We have had Dan Fitzpatrick from Stock Market Mentor and Zachary Carabell from River Trice Research, both on America's Favorite Traders today. Both of them were phenomenal. You're going to want to listen to both episodes. You're going to get an hour out of each one. Unbelievable. We talk with Zachary Carabell. We talk boom, superfusion, how the U.S. and China became one economy, how no one noticed, and how it's more important than ever, which is just my abbreviated version of Zach's title. And we do give you a teaser on the new book, Sustainable Excellence, right? Also from Zachary Carabell. Did you know Zachary Carabell has written 11 books? Yeah, 11 books. Did you know that Dan Fitzpatrick has written 0 books? Yeah, 0 books, but they're both worth listening to. We tried to get Dan to write a book, but he said he'd only do it when he retires, which is a long time from now because he really likes what he does. So you can check out Dan at stockmarketmentor.com. We'll have a link to it right on magnumopusfinancial.com. We'll also have a link to Zachary Carabell on magnumopusfinancial.com. So just go there, check out America's Favorite Traders. It should be a red button with the picture of James Altucher, Patty Edwards, and Jared Levy. Click on that. You'll get everybody's episode. Listen to whoever your favorite trader is. Don't forget, if you don't want to check back all the time, you can just subscribe to the podcast on iTunes. All right? So fantastic. America's Favorite Traders. It was a ton of fun. And I think one of these days, I'm actually going to be able to shave. That's right. I will have enough time to actually shave. But I don't know that it's this week because tomorrow we have another guest on America's Favorite Traders. Unbelievable. You see what we do for you guys? Fantastic. Okay. Now, today's trading action. Wow, the LED space. Really just LEDS. That's the ticker symbol. Semi-LEDS is the company, and terrible was the quarter that they reported. Look, this is like basically Cisco of the LED world, at least up until now. They were expected to have an 8-cent profit. They turned in a 3-cent loss. They guided down, and they said that their next quarter was going to be a loss as well. Okay, so one of two things is going to happen. Either A, we're about to have a Cisco-like meltdown in the LED space, right? So all the players are going to get painted with the same brush, and they're all going to go down in terrible sympathy of each other. Or, second choice, LEDS, semi-LEDS, which is the company, LEDS is the ticker symbol, is really just terrible all on their own, and so they are going to go down by themselves because they're terrible. Meaning, either A, the rest of the space is going to differentiate themselves from semi-LEDS, or LEDS is going to prove that they were the canary in the coal mine. Right now, it's a little early to tell. Here are some signs or things that may indicate that it's just LEDS that's seeing the weakness and not the whole LED space. One, they talked about having to cut prices just to maintain their own market share. If their fear of losing market share means that it's somebody else's gain, meaning Juniper and a name that we talked about with Zachary Carabell, you're going to have to listen to the episode of America's Favorite Trader, we're actually stealing Cisco's lunch. Meaning they're losing market share, which means when you lose market share, you lose pricing power. When you lose pricing power, your margins get crushed. It's a virtuous circle that ends in a terrible, horrible, no good, very bad thing. So, again, either A, LEDS is having a terrible job maintaining its market share because it's not doing as good a job as the other players in the space, or everybody's suffering. But again, if you're fighting a market share battle, that basically means somebody's on the other side of you taking that market share away from you. Hopefully on the 19th of April, when CREE reports, we'll find out that it's CREE taking that market share. CREE's been around since the early 80s. Semi-LEDS just went public a few years ago. CREE has $1 billion in cash on the balance sheet and $10 a share in cash. Semi-LEDS, not so much. Okay? For more on this, check out our previous episodes on CREE by searching for CREE and MO Financial on YouTube, and you'll get all the videos that have to do with CREE. But the bottom line is, either we're about to find out that the LED trade is over and dead and everybody should walk away, or we're going to find out that this is a LEDS specific issue, i.e. CREE and Juniper, right? We found out that what we thought was Cisco's problem, what we thought it was everyone's problem, turns out to be just Cisco's problem. It turns out that Cisco just lost its edge, and that other players in the space, like Juniper Networks, are taking it. Okay, so what are some of the other signs? On the open this morning, CREE got annihilated. I mean, it was hideous. Stock bounced off the $42 support, meaning unfortunately, it's a down channel, but there is a channel at which CREE touched the bottom of the channel, and now we hope to trade back up to the top of the range of the channel on a better than expected quarter. If CREE can deliver that, then there is good reason to believe that it will trade back up towards the top end of the channel. Estimates are getting taken down on a number of shops. I think Morgan Stanley put a $36 price target on CREE, which is a lot lower than it is here. And the bar set really low. They lowered earnings expectations by 29%. Look, the bar is getting set really, really low, and that's actually what we want to see ahead of the quarter. We want to see analysts take down estimates ahead of the quarter so that the bar that they have to jump over is lower, easier to beat. Look, at this point in the cycle, I'll take any beat, right? Even if it's a Kesha or oh man, I can't even think of her name. Jim Cramer is so much better at this than I am. He also has cue cards, so it's a little bit like cheating, but not a ton. Cascada, like, this beat is killing me, beat. Get off the dance floor, right? Okay. So this morning on the open, we did short the 42.5, 37.5 CREE put spreads. Look, if you are a fast trader and you did that move like we did, you're up 40% in like a couple hours. Take the dang thing off and move on with life, okay? The other thing, in May, we need a hedge. The last thing that we need to do with short put spreads further out on the calendar is come into bad CREE earnings next month. So for $1.20, we put on, you ready for a finger chart? There it is. The 45, 40, 35 long put butterfly in CREE. Remember, this part is just a long put spread. This part is just a short put spread. They share this strike. That's what creates the butterfly. Oh, do you remember when we got out our calculator? We could always use one of Zach Carabelle's books, right? And then I can't even do it. The book is too big, right? Here's the wings on the butterfly. This book is the shared strike. Yeah, it's a pretty terrible demonstration. We'll get some better visuals this summer when all the interns come back for the summer. Bottom line is, on a put butterfly, you're long, double short, and long. Okay, if you add these two together, they equal the number that you're short here. It kind of works out that the middle finger is longer than the other two fingers. Okay, so that's how you should think about it. Long, short, long. Long 5 contracts, short 10 contracts, long 5 contracts. For us, those strikes happen to be 45, 40, 35. That's how you put together a put butterfly. It costs you $1.20. If the stock goes to $40, that spread at expiration is worth $5. Even if it breaks through that, let's say it goes to 38, or even, well, let's say it goes to 38. That would mean that it broke, you got $5 on your long put spread, you lose $2 on your short put spread. At the end of expiration, it's worth $3. You only paid $1.20 for it. That's almost a triple. Not bad considering something terrible would have to happen in the stock for you to be profitable. If that doesn't happen, you take your top strike and you rotate it down, and then you've got a perfect put spread, right? 10 and 10. Remember, you had 5, 10, 5. If you rotate this strike down, you got 10 and 10. Isn't that fancy? It's really fancy finger work, huh? All right. We'll get that up for you on the board someday. If you want to see how to repair a put butterfly, go back in time and look at the Deckers, D-E-C-K, put butterfly trade that we did earlier on Lunch of the Market. Just search MO Financial and DEC, D-E-C-K, on our YouTube channel. It'll bring up that video. Okay, manage your risk. Let your winners take care of themselves. Speaking of winners, U.S. Steel is now above $55, and Deckers is in a race with Lululemon to break 90 by as much as possible. So those put spreads that were short there, we're going to look to take those off later on in the week as theta begins to eat away at the options prices. We're also at the top of the range on the S&P 500 index, the SPX. Be careful, okay? Get your hedges in place. Get your put spreads, your VIX call spreads, whatever you want to have. But if this becomes a double top, right, those who forget history are doomed to repeat it. So go back and look at a chart from last year around April the 20th. You'll see what I mean. Okay. Don't forget, earnings season starts next week in earnest. That's when all the haters have to face the music. And at the end of the day, the stock's price, P, equals M, the market multiple, times E, the earnings. Well, next week, we're going to find out E. The trick is to figure out what the appropriate market multiple is. You apply the two together, you multiply the two together, and you get P. That's your price target. Thanks for joining us again today. If you need more information on how to come up with the price target, how to use the PE math, search for MO Financial and S&P, and you'll find our video. Thanks so much for joining us today. Have a great day.